Tick tock, time is just about up. Joining us now to answer your tax questions this morning is Pam King Smith of King and his associates, and this is it.
This is it. 2 more days.
Hard to believe that it
2 more days.
comes like that.
Yeah, it does.
That means winter's over, though, at least, right?
Right, it's springtime. And happy Easter.
Yes, happy Easter. All right, let's get to your questions. My father is in a nursing home, and to cover the cost of his stay, I borrowed $7,000 from my 401k to cover some of the cost of his room and board. Can I deduct the money borrowed from my 401k?
Okay, basically, no, you can't, but there's always exceptions. The caller didn't say whether they were able to claim the dad as a dependent.
Gotcha.
Which means that they would be providing more than 50% of the father's support. If that's the case, then those medical expenses that they are paying can be deducted on Schedule A if they're able to itemize, but that would only be if the dad is a dependent of the taxpayer. So otherwise, you cannot take that $7,000.
Gotcha.
Right.
All right, good stuff. Next one. My son took out $19,000 from his IRA when he left his job and went on unemployment. He is subject to a 10% early withdrawal tax on this amount. Since he took it out because he became unemployed, is he exempt from the 10% penalty?
Okay. Again, general rule, just because you're unemployed does not exempt you from the penalty. However, there is an exception. If you use that money, the distribution, to pay medical premiums, you can be exempt from the 10% penalty. In this case, unemployment means you have to have received those federal or state unemployment checks for 12 consecutive weeks. So if you did that, you're considered unemployed for this exemption and you're not subject to that 10% penalty.
All right, pay attention to that. And this one says, I borrowed money from my retirement in 2016 to use as a down payment on a house. I am paying it back with interest over 15 years. Is there any way to deduct the amount of interest and what I've paid back?
This one is a definite no. So unfortunately, personal interest like that is never deductible. The only kind of interest that's deductible is your home interest, unless it's for a business. But in this case, that interest is not deductible for the taxpayer.
Obviously, we're really at the last minute here. It's Easter. Nobody wants to think about their taxes today. Any last minute tips?
At this point, extension.
Yes.
If you need more time, tell your tax preparer or yourself to go ahead and do an extension. Now, it's an extension to file the return, but if you think you're going to owe, obviously send money in with it. And you look at last year's return. If you knew you owed last year and you didn't make any changes and your income is about the same, you think you're going to owe, pay something with it to cut down on those penalties and interest when you're filing. The extension gives you until October to do it, but not that long to pay the taxes. You have to send something with that extension.
Okay, guys, this is it. Sorry, it's time. Celebrate Easter and get to work, right?
Yep.
All right, thanks so much for being here.
You.
If you'd like to get in touch with the Kings, you can call them at 410-486-4500. You can also check their website out at king-king.com.